Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. And we now only have 2 weeks to go into the US election. Not only that, of course, we've continued to see further lockdowns across the UK, Europe and the US. So if you're sat at home right now, if you're on lockdown, if you've had further restrictions in your area, this is providing you with a perfect opportunity to supercharge your income. Right now is a great time to really maximize these opportunities, compound your wealth, and make sure that you are taking advantage of these highly rewarding market conditions. We've had the update just last week from Goldman Sachs that they have had their most profitable trading quarter in a decade here, and they're predicting this quarter to be the most profitable on record. So with that, you definitely want to capitalize. Right now we have fast moving markets where day to day it really is a trader's market. It's not a buy and hold market here. You need to be taking advantage, regularly banking those profits, being very nimble in these markets, ready to trade the ranges up, down or sideways. Whatever the markets are providing you with in terms of day-to-day opportunities, you want to be maximizing that, and the time to take action is now. Overall, it really doesn't matter which candidate is going to win the election, from the standpoint that in the next few years this will be marked by massive government spending, unprecedented levels of monetary stimulus into the trillions. Traders and investors are convinced that more US stimulus is on the way, and even if that's not unveiled until after November the 3rd, the only question now is how much stimulus will be passed and when. And over the last couple of weeks, it's been very interesting here, where we are seeing gold no longer act as a safe haven, but it's now acting as a hedge against inflation. And we're also seeing the roles switch here, where any signs of economic and geopolitical uncertainty, we are immediately seeing the US dollar get a bid as the safe haven, whilst the primary catalyst for gold is now stimulus. Now, the election trade is already on right now, but there's still plenty of time to get your trades up into the lead up to the US election. You don't just want to be looking to trade on that particular day. You need to be prepped and fully aware of the scenarios leading into the US election, building the trades into the lead up of that, having your portfolio correctly aligned to take advantage of either scenario, and also being aware of the very strong seasonal cycles that you typically get after the US election as well. Not only that, of course, we've also seen massive moves here on energies lately. We mentioned to you last week, we banked right off the open over 1,000 points on natural gas. It had another very large gap off the open. For every one lot traded, that's $10,000 of profit. For every 10 lots traded, that's $100,000 of profit on that trade. Elsewhere, oil prices, of course, over the last couple of weeks, they've gone up over 10%, which is the biggest gain since June. So if you do want to thrive in these fast moving market conditions, you do need to be nimble right now. You have to be adaptable, able to utilize a research driven approach in the market. And the good news right now is that many of you may find that you've got, again, extra time on your hands. You might be working from home, you could be on lockdown or have further restrictions, and you're able to really capitalize on the additional time right now to learn the research driven approach, get that additional accuracy and precision with your trades. Avoid the trap of using outdated technical analysis and technical indicators, which just won't work in these markets. If that's what you're relying on in these market conditions, it won't give you any edge at all. You'll often end up getting chopped up in these markets. You're FOMO in at the wrong prices. You miss the moves. You can panic sell out of your trades when you're using these outdated technicals. The greater the data and intelligence you have access to, the greater the edge you will get. That's where you need to know how the hedge funds, the banks, they're positioning themselves in the markets, where they're buying, where they're selling in real time, so you can get your timing precise, have access to institutional data to track capital flows so you know where the smart money is going, key liquidity zones, fundamentals, macro intelligence, seasonal cycles, intermarket correlations. This is where you'll get a 3D view of the market. You need to trade like a professional, utilizing a research-driven approach. So with that, let's move over to the charts and we'll talk you through our expectations here as we go into a new week. The first chart we're going to look at is the gold to silver ratio. Whilst the ratio remains below 80 to 1, it is going to be supportive for gold and silver prices. When we spiked up above 85 to 1 with the ratio at the end of September, when we saw the end of quarter profit taking for the metals, this is where gold tested 1,848 US dollars per ounce. Since then, the ratio has been breaking down, and as it's steadily been breaking down, this has provided support with gold and silver. They've been consolidating, but essentially they have been building higher lows. So what you need to see, if the price action with the metals is going to get supported into next week, the ratio needs to keep consolidating to breaking down. Okay, so it needs to consolidate to lower. So what I would be looking out for on the ratio is whether we get that price action breakdown back towards 77, 76 to 1 and so forth, which would be then supportive for gold and silver. On the flip side of that, if the ratio was to break out, and if it breaks above 80 to 1, particularly if it closes above that level, that's where you're going to get the further correction lower on gold and silver. And that's where you would also expect the US dollar index to do well. So the dollar index over the last week is up almost 1%. Every time the market shifts into a risk-off environment, this is where the dollar immediately catches a bid. And the dollar right now is being treated as the safe haven more so than gold here. So that's what you want to keep an eye on, particularly as you lead into the US election, where you've got further uncertainty, where you also have further lockdowns around UK, Europe, USA. This is where often capital is flowing into the dollar, and as the dollar increases to the upside here, this then puts pressure on the metals. And if you see the gold and silver ratio, they break higher as well. This is a perfect storm for a further pullback on the metals. But on the flip side of that, what you'd want to look out for further support again on the metals is if the dollar was very simply to roll over and be under pressure going into next week. If the gold and silver ratio they break down, that's what supports the metals. So you need to be looking out for these intermarket correlations. Be mindful of whether we're risk on or risk off on any given day, and also be aware of where the dollar index is at the moment, because it will give you the lead on a lot of other markets at the moment as well, particularly when the market very quickly switches into risk off environment, when traders get fearful, when capital is coming out of equities. For example, we've seen that on Friday with the S&P 500 down 0.5% on the day. Pressure to the downside on global equity markets as capital is flowing out of equities, moving into the dollar as traders are moving into cash. That then propels the dollar higher, which can put pressure on some of the metals. But you need to be aware of this day to day, because this will help you massively with your entries. Then moving over to gold. Gold closed on Friday at 1,898 US dollars per ounce. What I would observe here, of course, we're still in consolidation. I would still look to play the ranges here on the metals. You've still got 2 weeks until the election. There are some great opportunities to be had here day to day with this current volatility, but it's the same here for also platinum and silver. The ranges that we're seeing at the moment are very lucrative to keep coming in and out of the market. We also established dollar positions as well as a hedge against any volatility on the metals here. Banking profits regularly here, being nimble, will help you a lot with the current volatility that we're seeing right now. Palladium, as we mentioned before, is a trade that has delivered a huge amount of profits for us. So over 6,000 points that we had in the previous week on this market. We still have our 2 positions on Palladium, which we executed at the end of August. We continue to maintain those trades. In fact, on Palladium, I would encourage you to switch it out to the weekly chart. It's a trade opportunity that we highlighted to you in detail over the summer months, where what you want to be doing is establish your core position on this market over the summer. There are some great opportunities to swing trade this and also come in and out for very fast profits. You can see on some of the weekly candles here, we've generated over 2,000 points within a single week on this market. The sort of move that would normally take several months to get those gains on Palladium, especially this year, can be achieved in just a matter of 1 week. So a great market for you to have on your watch list, and a very tradable market which you want to be taking advantage of, particularly in the lead up to the election and in the seasonal cycles that we get going into December, January and February. Again, silver is a very interesting market here as well. Goldman Sachs came out last week and gave their entry target, which was 24 US dollars per ounce on silver. And it's been interesting because both over Tuesday, Wednesday, Thursday and Friday, on a closing basis, that level is being defended. So yes, Goldman Sachs have bought into silver at 24 US dollars per ounce. Into the close here, silver is trading at $24.12 per ounce. We're in a cycle here in the lead up to the election again, where silver has a very particular path that it follows, typically in the lead up to an election. So does the dollar, so does gold. So I would definitely watch this market. We formed the lows here around the usual end of quarter profit taking at the end of September. Since then, we've seen a fairly reasonable bounce, a $3 bounce to the upside here. Silver, as you can note, is consolidating at the moment. We've formed a pennant on this market. We've been consolidating for over a week, but I would certainly watch this market. When silver gets going, it can move very fast and deliver some huge percentage returns. So silver, I would definitely have on the radar. Finally, of course, crude oil, which over the last couple of weeks has had a 10% move to the upside. Very simply, as we lead into the election, you're going to have some very binary results here for oil. You would have seen previously when Donald Trump went into hospital a couple of weeks ago when he caught COVID-19, oil prices cratered very quickly. They broke all the way down to $36 per barrel. This is because Joe Biden's policies are not going to be favorable for crude oil prices. If Joe Biden was to win the US election, this is where crude oil is very likely to sell off. On the flip side of that, as soon as Donald Trump came out of hospital, he announced his recovery. This is where very quickly oil prices, they were able to find support. They rallied 10% to the upside. Not only that, you've also got an industrial metal such as copper, which is very correlated to oil prices too. We bought in on the dips here after non-farm payrolls at the beginning of the month. We banked 150 points on this trade. There are just countless opportunities to be maximizing right now. And if you do find that you've got more time on your hands, you're working from home, look at the positives here. It's going to afford you an opportunity to utilize this time to really level up your trading ability, learn a research-driven approach to the markets so that you can utilize data, market intelligence. You can position yourself to trade the same way that the hedge funds, the money managers do. Be aware of the key liquidity zones, how the funds are positioning themselves in real time, all of the intermarket correlations, the cycles in the market which routinely play out. This will all help you get that edge, utilizing our research to be really precise with your entries. So with that, if you would like to join a community of successful traders, learn a research-driven approach to the market, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You have access to our real-time trade alerts, trading research and market insights, access to our private Members Academy membership site, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.